Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial mumbo jumbo. This badger meter report is kind of like a water meter itself, telling us how much water the company used up and how much it sold. But will it be a flood of good news or a drought of profits? Let's find out. This is a quarterly report from Badger Meter, a company that makes water meters and other water management equipment. Think of them as the people who help utilities track how much water is flowing and where it's going. This report covers the 3 months and 6 months ending on June 30, 2025. First off, some important numbers about the company's shares. As of July 11, 2025, they had almost 29.5 million shares of common stock out there. This is a good number to keep in mind when we look at earnings per share later on. Now let's dive into the financial statements. The balance sheet shows us what the company owns and what it owes at a specific point in time. It's like a snapshot of Badger Meter's financial health. Looking at their cash positions on June 30, 2025, Badger Meter had about $165 million in cash and equivalents. This is quite a bit lower than the nearly $295 million they had at the end of 2024. This big drop in cash needs some explanation. The company's assets have a significant chunk of goodwill, which is about $235 million. Goodwill usually represents the value of a company beyond its identifiable tangible assets, often from an acquisition. This is a large number and it's good to see where it's coming from, especially since it's almost doubled since the end of 2024. Moving on to liabilities, we see payables at $74 million and total current liabilities around $108 million, which shows their short-term obligations. And then there's shareholders' equity, which is what the owners really owned. It's just over $677 million. Keep an eye on that accumulated other comprehensive income or loss figure, which is now positive at about $555 million, a notable improvement from a loss of almost $8 million last year. This next table, the statement of operations, tells us how the company performed over a period of time, showing their revenues, profits, and expenses. For the 3 months ending June 30, 2025, Badger Meter reported net sales of about $238 million. That's a pretty good increase of almost 10% from $216 million in the same period last year. For the first 6 months, sales also jumped to $460 million from $412 million a year ago. This shows they are selling more of the water management solutions. Their gross margin, which is basically sales minus the cost of making their products, improved to 41% for the quarter and 42% for the 6 months up from 39.4% a year ago. This means they're keeping more money from each dollar of sales, which is always a good sign. However, their selling, engineering, and administration expenses also went up significantly. For the quarter, they were $52.9 million, a big jump from $43.9 million a year earlier. This increase is largely due to the acquisition of SmartCover, which we'll talk about later. All this led to net earnings of $34.6 million for the quarter, a slight increase from $33 million last year. On a per diluted share basis, earnings were $1.17 up from $1.5. For the 6-month period, net earnings were $73 million up from $62.2 million a year ago. This is a 6-month period. Net earnings were $73 million up from $62.2 million a year ago. This is a solid performance. This statement captures other income and expenses not directly related to the core business, like foreign currency adjustments. Good news here, as the foreign currency translation adjustments swung positively. They had a gain of $8.3 million for the quarter and $13.5 million for the 6 months. Last year, these were negative, impacting their overall income. The cash flow statement shows money coming in and going out of the company. It's crucial for understanding how the company is funding its operations and investments. Cash provided by operations was $77.6 million for the first 6 months of 2025, up from $57.9 million in the same period of 2024. This increase is a direct result of their higher earnings and better management of working capital. Now let's talk about where a lot of that cash went. They spent a whopping $184 million on acquisitions, netting out the cash acquired. This is a major investment. This is why their cash balance dropped so much. They used $130 million less cash overall in the first half of this year compared to last year, driven by that big acquisition. The company made a significant acquisition in January 2025, buying SmartCover Systems for $84 million. SmartCover specializes in monitoring sewer lines and lift stations. This acquisition is expected to boost their offerings in the utility water market. SmartCover contributed $16.7 million in revenue in just 5 months, which is a nice addition. They also acquired Telog remote water monitoring hardware and software in early 2024 for $3 million. Here's a look at how they recognize revenue. They break it down by geography and by when the sale happens, either over time or at a specific point in time. The United States continues to be their biggest market, making up about $214 million in sales for the quarter. Foreign sales are growing too, with Europe contributing $11.3 million for the quarter. Revenue recognized over time, which is often from software subscriptions like their BARC and SaaS, and some SmartCover revenue is about $23 million for the quarter. Revenue recognized at a point in time for products like water meters is much larger at $215 million. They have $91.9 million in unsatisfied performance obligations, meaning customers have paid for services or products that Badger Meter still needs to deliver. They expect to recognize about $15.2 million of this in 2025 and the rest over the next several years. This section is management's direct talk about their business. They highlight their Blue Edge solutions, which are a mix of technology, software, and services. They're seeing good growth, especially in their utility water segment, which makes up about 88% of their sales. They also talk about their product mix, noting higher margins on smart metering and software compared to traditional mechanical meters. This is a smart strategy to focus on higher margin products. As mentioned, the big SmartCover acquisition is a key part of their strategy to expand their offerings and market reach. They're seeing increased revenue from their software as a service or SaaS offerings like Beacon, which is good because SaaS usually means recurring revenue and higher profit margins. They are also navigating tariff changes, which can increase their costs for materials, but they are managing these through supply chain and pricing strategies. Here's a breakdown of their performance for the quarter. Sales increased, driven by both meter volumes and the new SmartCover business. While their utility water segment grew, the industrial flow instrumentation segment saw a small decrease. Gross margin dollars increased, a good sign that their products are selling well and at profitable prices. However, increased spending on selling engineering and administration expenses is notable, especially with the new acquired company and investment in growth. Net earnings per diluted share were up slightly. It's a positive trend, but the increased expenses is something to watch. Looking at the first half of the year, sales are up significantly, driven by utility water growth, and the SmartCover acquisition contributing $16.7 million in revenue. Operating earnings also saw a healthy jump. Their gross margin percentage improved, reflecting pricing power and a favorable product mix. Again, selling engineering and administration expenses increase due to growth investments and the acquisition. Net earnings for the first 6 months were up nicely, showing a stronger overall performance for the year so far. This section talks about how the company manages its money. They track their primary working capital, which is receivables and inventories minus payables. It increased compared to the end of last year, which is partly due to higher sales and the acquisition. Cash from operations is strong and increased significantly. The big drop in cash is clearly linked to the SmartCover acquisition and paying dividends, which shows they are investing in growth and returning value to shareholders. Badger Meter has access to a $150 million credit line, providing financial flexibility, and they appear to be in good standing with their loan covenants. They feel confident in their ability to fund their operations and future plans. The management confirms their disclosure controls and procedures are effective. This means they believe the information they're presenting to investors is reliable and accurate. Interestingly, in the quarter ending June 30, 2025, they didn't repurchase any shares of their common stock. This is a bit unusual given that they had a program to buy back shares. So what's the verdict on Badger Meter? They are clearly a company focused on growth and innovation in the essential water management sector. The acquisition of SmartCover is a bold move that should pay off by expanding their service offerings and market share. Their revenue and earnings are growing and their margins are healthy, especially with the shift towards higher margin software solutions. However, the increase in selling, engineering and administration expenses, largely due to the acquisition and growth investments, is something to monitor. While acquisitions are often necessary for growth, they can also strain resources if not managed effectively. The drop in cash is directly tied to these strategic investments, so it's not necessarily a bad thing, but it does mean they're using up their readily available funds. The lack of stock repurchase during the quarter is a minor point to note, but doesn't seem to indicate any major issues. Overall, Badger Meter appears to be on a solid trajectory with clear strategies for expansion and profitability. They are adapting to market trends by embracing technology and offering more comprehensive solutions. The key will be how well they integrate their new acquisitions and manage their increased operating expenses while continuing to drive sales growth. Alright, that's our deep dive into Badger Meter's latest financial report. What do you think about their acquisition strategy and their focus on smart water solutions? Let us know your thoughts in the comments below. And if you found this breakdown useful, give this video a thumbs up and subscribe for more corporate dissections. Don't forget to join our Discord community linked in the description for even more insights and to chat with fellow finance enthusiasts. Thanks for watching and we'll see you in the next one.